Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Please don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm sitting today with Michael Porter. Hello, Michael. Welcome back.
Yeah, morning, Robin. The whole team back in action.
Yeah, it hasn't been you and I for a while, has it? Travel and a bit of sickness and what have you. Michael, the world doesn't seem to be in any better place. Trump is carrying on with his things, and locally we've got a new commission of inquiry. I don't know whether that's iteration 764 for this presidency. And yet we have a strong rand. We're at new all-time highs on the local and lots of overseas markets. Should we be worried?
Yeah, Robin, it's interesting. I mean, if you said at the start of the year this is where we're going to be, I don't think anybody would have believed you or taken that. And you look at what happened in April the 2nd, where the tariffs were announced and they were delayed. Now we've had the July deadline, now the 1st of August deadline's looming. And I think there's a sense that markets are ridiculously complacent. Volatility has dropped right down. The VIX index, which sort of is the fear index, is it's not at record lows, but it's very, very mild and low. And Robin, I think there's an element of, does Trump back out again before the 1st of August? I think that the taco trade, I think, is still there. I don't think that's necessarily going to be the case, because I think Trump is aware of his nickname and doesn't particularly enjoy it. But obviously there's some trade deals being struck with Japan. There was talk, there's ongoing rumors that there's going to be a deal 15% between the EU and the US. Now, 15% is not great. I mean, Japan, 15% is not great. And if you'd said at the start of the year, we're going to have 15% tariffs, markets would have been in free fall. I think what's really happened is that, you've painted an absolutely worst case scenario, and maybe this is a typical politician's playbook. You paint a ridiculously bad scenario, and then you dial something back in between, and everybody is like, well, thank goodness we've avoided the bullet, and everybody's quite happy, and actually underlying it, conditions are deteriorating a little bit, So, listen, I think the jury's still out. I think there's some evidence that the tariffs are starting to show up in some of the data. But I suppose it is all about at the margin. And if you've priced in a bad scenario, then it's not as bad, then markets get on with it. So we're in the middle of reporting season in the US specifically. I think it's going to be quite interesting to see how companies themselves are actually just responding and bringing up the issue of tariffs and what the costs are going to be. But we're probably going to have 1 or 2 rate cuts in the US. So generally, I think the outlook is more benign than maybe. Well, it's not as draconian as it could have been, but I don't think that implies that it's not going to have an impact.
Yes. And bringing it locally, Michael, I mean, we've seen the rand sort of bouncing around under 1760, which is a great place to be. And yet locally, there's still lots of infighting. We've got real questions over the capability of many government departments. The politics is as fractious as ever. But there's this thing, the terms of trade, and that's driven by the platinum price. Talk a little bit about that, and why is the platinum price sort of going up, and how does it feed into terms of trade?
I think terms of trade are very important, Robin. So the terms of trade is really, I suppose, the value of your key imports versus the value of your key exports. And broadly speaking, for us, in terms of commodities, we import oil and we export gold and platinum. Now, those trends are superbly in our favor. Gold prices are at record highs, virtually. Platinum prices have recovered spectacularly over the last sort of 3 or 4 months, probably going from platinum maybe $1,000 an ounce to 1,400. And why the platinum price is a bit higher, I think generally there's a shortage of supply. South African miners are under pressure. They've cut production, and we've had rains, we've had flooding,
Transnet was.
Yeah, but I mean, Robin, we're not, our platinum mining sector has been under pressure for such a long time. We're just not producing. Guys have cut back, they've retrenched, they've closed a few shafts, so I think supply is quite constrained. I don't think demand is as bad as people feared. I think one of the consequences of Trump is kind of rolling back the whole green agenda. And maybe that focus on petrol cars, there's not as much fear that the internal combustion engine is going to disappear in the next year or two, and fuel cells and things are growing. So the platinum price is high. So our terms of trade is positive, and that's obviously bringing the rand down. And I think what also has happened is what we've been talking about in terms of just a reappraisal of a slightly weaker dollar, good for emerging markets. There's definitely been a shift in the flow of funds around the world. Maybe investors seeking out some alternatives to the US. But I think at the moment there's a tug of war again going on between kind of going back to US exceptionalism. I mean, the tech stocks are quite strong, but I do think that people are looking around the world and asking for, looking for different opportunities. So the rand is quite strong, but yes, local politics is, well, it's a smorgasbord of.
It is
of
what
news.
it is.
But yeah, I mean, I think, Robin, in some ways, you look at the market. I mean, what's pushed the market really high this year is gold, platinum shares. Naspers, we've been saying for a long time there's a recovery coming in China. Not so much on the Richemont side, on the luxury goods side, but more on the tech side. So some of the SA Inc. kind of sectors, sort of banks and retailers, are probably a little bit more under pressure and probably reflecting maybe a little bit more of the subdued mood. The Reserve Bank meets next week. Hopefully they will cut interest rates again just to keep the momentum in the economy going.
Nice.
But I think what's really, and sorry, maybe one more point on the mining sector is that China approved a huge dam earlier this week or last week. And that is, I think the estimates are that will require 2 million tons of steel or even more. So iron ore prices have had a rally, miners have had a bit of a rally. So I think our market is at record highs, but it's largely the mining sector's having its sort of day in the sun after a couple of weak years. I think domestically things are quite tough.
Awesome. Michael, thank you for giving us that insight. It's good to be together with you again. Please don't forget to like and subscribe, and we'll catch you next time. Bye-bye.